Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 9th of May. All right, we're steadily making our way into the start of the Asian session, so it's a good time to refresh all your charts and get ready for the upcoming 24 hours. Now, just to start with, this week has really been a bit of a pain in the backside. Okay, we've had a couple of key central bank releases, which would generally, be a little bit volatile and aggressive, but what we're seeing is the whole Trumpinator. And you're going to love to really dislike Trump because what he does to the market's all random. This China-US situation, it has been on the front of every page for like the whole week since the weekend, okay? And there was gapping on the Monday, and that's a sign that the week was going to be tough from the very get-go. And once again, still on all pages, Trump, China, it's everywhere, right? So this is dominating. It's blowing out the fundamentals. So when you come back to look at the general market itself and you're wondering why is it a little bit trickier this week, why the currency is a bit more volatile, why is there more, there's a bit more slippage around in the market, it's because generally speaking, the majors have been drifting sideways. I mean, dollar yen and the Aussie and Kiwi, they are starting to feel the pinch here and under pressure with this situation. But before even yesterday, the majors are just drifting sideways, and the news is random. And so traders globally are getting in, getting out, getting in, getting out, and that's actually the price action that has really chopped up a lot of traders this week that I've been talking to. They're like, well, what's happening? It's like, well, it's the geopolitical backdrop which is really diffusing the fundamental aspects of the market. Now, in saying that, we are now through the RBA, we're through the RBNZ, and we're through a lot of the general carnage. Now, the news will continue until we get some sort of inkling of a deal between China and the US, right? Trump is applying huge pressure at the moment. We've got a massive release here today, okay, in the Asian session, the Chinese CPI data. Now, the good thing about this is it's one number, right? So traders will not get confused with the number. It'll be either strong, weak, or as expected. Now, just be aware, this is fraught with danger, primarily because a lot of the big Chinese releases, the Bureau of Stats there is not exactly tight, right? The data is often leaked 20, 30 minutes beforehand. You could see a 300-point move on the yuan before the release. It may be correct, it may not be. And what you're going to experience is with this week and with the tensions around the US and China trade talks, increase or less liquidity and more gapping in the market. So don't think it's going to be a huge one to rush into. Obviously, the Aussie and Kiwi, these two pairs here, they are under pressure, right? The Aussie spiked up after the RBA did nothing, which was as expected. The Kiwi spiked down on the rate cut, which was expected, but they are both drifting lower now, under pressure with this situation. Now, fundamentally, the central banks are still erring on the side of caution with global growth, etc. So weak Chinese numbers should see these pairs move lower. Okay, it may be short-term momentum you can jump on. If it's massive variance, well, then we may see a bigger move. But you know what? Behind the scenes, regardless of what this data is, so this may come out weak, it may push these things down, and then this news over here may come out like a great deal for China and all the currencies will rally. So just be careful with what you're doing. I don't see any long-term trading opportunities whilst the US and China are trying to work out a deal. So if we do get a trading opportunity on these Chinese numbers, it is pretty short-term. And what I mean by that is, over the next probably 12 to 16 hours until the North American session opens again, that's where the talks are happening. That's where the news will come from. So you're pretty safe, I think, to be trading through the Asian session and the European session, particularly around the Chinese CPI. And once we get in the North American session, it all changes again. All right, so that's what you need to be aware of. So running positions just loosely is not a good idea over 24 hours. Now, we do have the Fed Chairman Powell speaking today. He is opening the discussion, like some sort of discussion. It's the opening address. Now, that usually isn't too big a deal, but you want to make sure that he isn't put under the firing line with regards rates and what's happening in China, etc. I mean, Powell is very calm, but just be aware this is a potentially very high impacting event. You got the US PPI coming out as well. That's it is another inflation number, but once again, the geopolitical situation that is the core driver here is probably going to wipe out the importance of the fundamentals at this point. So Fed Chairman Powell speaking, it is a high risk event, but I really don't think there's going to be a huge amount into it. That's just my opinion. This CPI number is going to be loose, right? If we don't see a move in the yuan beforehand, now that's one of two things. One is the data is going to come out exactly as expected and it's already been leaked, or it hasn't been leaked and it's a trading opportunity. So just be aware that there's a few variables to consider here. You got the news that's, it's like propaganda. They're just trying to sell media, good for China, bad for US, et cetera, and throwing it around. But what traders want to look at is the core numbers. What's actually happening? And this is where that CPI number really comes into play today. And, to me, I eyeballed this at the start of the week as being one of the best opportunities alongside Friday's US CPI numbers. All right. So the CPI numbers are the go-to, a lot better than a lot of other things. At the same time, geopolitical events like Brexit and this China-US situation makes all the trading a hell of a lot harder because it confuses the fundamental aspects of the economies, and also the short-term direction is sporadic. All right. So when you come over and look at the charts, it's it's a bit of a dog's breakfast with the currencies. As I said, the Aussie and Kiwi, they are starting to fall lower. I mean, I've blown up the Aussie here, so it looks a little bit weird, but it is going down. I'll widen that out in a second. Now, dollar yen is starting to feel the pinch, right? It is finally, like, it's moving lower slowly but surely. But on the hourly and daily charts now, it has broken down. It's broken down through the cloud. This thing is starting to tread lower. And if there's a blow up between the US and China and there's no deal, then we could see a decent move down in dollar yen. To me, there are no levels to really get in. It's going to be random as hell. So that really takes out the opportunity. And then you come back to looking at the big European pairs, euro and sterling, well, sideways. And check out the wild price action here on dollar CAD. It is all over the shop. Okay, so we've still got to wait a few days. Well, tomorrow's employment numbers in Canada is going to be important, but that's sort of the way the currencies are trading at the moment. It sort of sucks, right? That's what you got to understand. And there's no better way to put it than that. And let me just widen it here. So there's the Aussie. You can see there where you can get a better idea of the overall trend. Same with Kiwi. Now, Euro, what's it doing? Well, as you can see, it's sort of diffusing itself. Technically, these pairs are still sort of heading lower, not really in a massively orderly fashion over the past sort of 10 days. Kiwi a little bit different, but Euro definitely sideways from here. So you're probably thinking, well, we need something big to come out for the Euro to move. And that's the US CPI Friday. So these pairs up here, Aussie and Kiwi, are definitely a go-to. So make sure you focus on that. And outside of that, you do have the dollar yuan. If I just blow this up, you'll see how loose this thing is. So after the dodgy comments from Trump on the weekend, this thing gapped from 6.735 up to like 6.79, I think it was. Okay, nice 550 point gap. Now, it's just been trading sideways since then. I was saying on Monday, this thing has got another 20 big figures to go on the top side. That's where it belongs, right? And so if there's no deal, we should see this thing up to 6.95 or above very quickly. Can you get in? Well, Harry Hindsight knows that one, but it's going to be a tricky one because it is so loose. And, if they do get a deal, we will see a move equal to that on the downside. So trying to get in, say, placing orders or having pending orders in the market can be hazardous because if it gaps, you think you're getting in here at 6.79, where in actual fact you're getting in down here at, say, 6.73, and it chops about and you're stopped out as soon as you get in. So tricky times. And this is what, I've been saying like not just for this week, but for years. Geopolitical events, as a trader, you will come to hate them because they are absolutely crap. It diffuses, as I said, the general technicals. It diffuses the fundamentals. You lose track of all these things, and it's just trading on random news. In amongst that today, we do have the Chinese numbers. So check it out, but just be sure, decrease your trade size. I would suggest if you're trading the yuan, all the Aussie or Kiwi, right? The markets are a bit fickle at the moment. All right, guys, not all doom and gloom. Those US CPI numbers and this trade issue hopefully will be sorted out this week, and then we'll be back to really good trading conditions. All right, guys, keep it real. We'll see you in the 247 trade zone. Cheerio.